Hello and welcome to another update video about ADA. ADA hovering just below the breakout point of this triangle pattern that we have been tracking here. So we've got this ABCDE triangle pattern. Been talking about it in the last few days and weeks that a break above the 27-cent level could unlock a rally into this region here between 30 to 34 cents. Now, obviously, I always try to make you aware of such developments before breakouts happen. Now, we haven't broken out yet, but it gives you a level to watch, and it could generate some upside pressure if we get above that level, and the price should then go and try to fulfill here this E wave of the overall triangle. Remember what we said about this overall structure that has been developing since December. It still looks very much like a triangle. We've been waiting and waiting for a bit of a rally into this wide target range. Maybe it has finally started. In the meantime, another triangle has emerged, which could of course mean that we go down more directly. Yeah, this smaller degree triangle, ABCDE, could break out to the downside, but there are a few conditions that need to be met on both sides. Basically, a break above the 27-cent level could unlock a rally into this region up here. Until then, a more direct breakdown is likely, but it would take a break below 23.7 cents to confirm. So it looks like as if we are in this range. I think a break above 27 cents is now quite likely the way this is going. But it ultimately depends really on the bull's ability to just show up here and to just break it. Okay, so at the moment, this triangle down here is pretty much full. It's a so-called running triangle, A, B, C, D, E, and another bear market low would be still likely if we get a break below the 23.7 cent level. However, I have to say, I mean, this is pushing quite a bit. I mean, it reacted where it needed to react, but I don't see a strong move to the downside. So it's consolidating on, you could say, a fairly high level. So what I'm watching for is potentially that this could be a small impulse to the upside in the C wave. And what we also can highlight is the relevant support that needs to hold. So if you take a bullish position, and you want to know, okay, so how long can this upside pressure be kept alive? I mean, first of all, it needs to break out, but what is the level that needs to be crossed to the downside that a break below 23.7 cents gets more likely? You want to have a bit of an advanced warning. And that would be here, the 50% retracement level, 25.4 cents. And at the same time, it would be a break below this small swing low. I mean, we're talking about microstructures here now, but that's very, very close anyway. Okay, so yeah, I mean, there is not much more to say. I mean, ADA still in a tight range here. Yes, this could be an Elliott wave triangle. Let me just remove the trend line here, but it hasn't even broken really above this descending trend line. So literally the levels and parameters are very well defined, I think. It would literally take a break above this zone, above 33 cents, 34 cents it is, to indicate something more bullish, and then confirmed, a more bullish count would be confirmed with a break above the 38-cent level. So literally, at the moment, this could break down more directly, but I think it has become more likely with the way the markets are going that we go a little higher in our originally defined target area before coming down. And it would literally take a break above this high, which is the July high, to indicate that something like a diagonal is unfolding. The problem is with the ADA chart, while this would all mean, okay, you know, we are going into a multi-hour uptrend and everything, zooming out a little bit, which is very important, context is always very important, could just indicate that this move here in December to the upside, it was just an A wave, overshooting B wave down, and this here is going to form something like an ascending wedge pattern, like a diagonal pattern, ABC before breaking down. That's still something that we have to consider, okay? still something. That's why ultimately, to confirm that we get back to all-time highs, we need to see 5 waves up, 3 waves down. Okay, and not just 5 up. That's not going to be enough. So yeah, very, very difficult chart. But obviously we're going to start tracking uptrends on the multi-hour time frames. And if we get a break here above this green line, I will start to track an actual uptrend in addition. But first of all, we would want to see if we get a reaction in this target zone here, which is important for this larger E wave of the triangle. And how did we determine that? Well, see, we took the length of the C wave, and then we go to the low of the D wave, and I just have to select the right fibs. And then you can see here, this is broadly the area, depending on how accurate I measure it. But this is sort of roughly the area between 30 and 34 cents. The 38.2 extension and the 61.8 extensions of the C wave, they are ideal targets for wave E of a triangle. There is not much more to add, but I think it's going to get more interesting should we really get a break above the 27-cent level, which seems within reach. So I keep you updated. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.